Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this channel, we break down complex Forex concepts into actionable strategies. So if you are serious about improving your trading game, then you are in the right place, all right? In this video, we are just going to be diving into the running flat pattern. Okay, we're going to be talking about what it is, how to identify it, and why it is a crucial tool for analyzing market corrections. All right, so stick around, grab a notebook, and let us get started. Oh, and before we jump in, if you're enjoying this content, don't forget to hit that like button and subscribe to the channel for more videos that will level up your trading skills. All right, let us get into it. So we're just going to be starting with the basics. A running flat pattern is a type of corrective wave. It's a type of corrective wave that is often found in trending markets. So remember that based on the Elliott waves theory, we have 5 waves, right? So let's say we have wave 1, wave 2, wave 3, wave 4, and wave 5, right? So the running flat pattern is usually found in the corrective wave. So this is an impulse wave, this is a corrective wave, this is an impulse wave, a corrective wave, an impulse wave. The impulse waves are the waves that are in the direction of the trend, all right, while the corrective waves are the waves that are against the trend. Okay, so what makes the running flat unique is that it does not fully retrace. Okay, it typically occurs when the market takes a brief pause to consolidate, all right, before continuing in the direction of the overall trend. Okay, so instead of fully retracing, it maintains the momentum of the previous, or rather the momentum of the prevailing trend. It maintains the momentum of the prevailing trend, giving traders valuable clues about what could happen next. Okay, so running flat patterns are part of the Elliott wave theory, right? Where they are classified under corrective waves. Okay, and they are characterized by 3 distinct waves. They are characterized by 3 distinct waves. Okay, and these distinct waves are wave A, wave B, and wave C. So usually wave A moves against the trend, all right, like in this scenario. Although this is not exactly a running flat pattern, we're just going to check briefly if we can find that, but if we do not find a running flat pattern, I would have to use lines to explain it. Okay, so in this case, this is wave A, right, this is wave B, and this is wave C, all falling within the corrective wave. Okay, but as for a running flat pattern, wave A moves against the trend, wave B retraces beyond the start of wave A. That's one of the unique things about a running flat pattern. So sometimes you might not always find such a pattern, right? You might not always find it sometimes. So I think I might just have to use lines to describe it, right? And I just have to use lines. Okay, so let's say this is a wave A, right? Okay, I'm just going to quickly okay, this is wave A, sorry, this is the first wave of the Elliott wave pattern. This is the second wave. Let's assume okay, And let's assume that this is our third wave, right? And then this is a fourth wave, and this is our fifth wave. Okay, it's an assumption. So now let's just assume that the running flat pattern was found in the second wave. Okay, so we have wave A, right? We have wave B, and we have wave C. Now, one of the things to note is that wave B retraces beyond the start of wave A. So this is wave A that started here, but wave B retraces beyond it. Okay, and wave C falls short of wave A's end. It doesn't get to wave A's end, but moves in the same direction as wave A. All right, so this unique structure is what sets running flats apart from other corrective patterns like zigzags or triangles. Okay. Now, why should you care about running flat patterns? These patterns can provide key insights into market psychology. They indicate that buyers or sellers remain in control, even during temporary pullbacks. Okay? Now, recognizing this pattern early can give you the confidence to stay in your trades and avoid getting shaken out during a correction. For example, let's say you are in a strong uptrend, right? Let's just go back to an actual uptrend. Let's just assume that you're on a strong uptrend, something like this, right? You're in a strong uptrend, okay? And then you spot a running flat pattern forming along the line, like somewhere you notice a running flat pattern forming. Instead of exiting your position prematurely, you can use this knowledge to hold your position. So assuming maybe the running flat pattern formed around here, somewhere around here, once the pattern has completed after wave C has formed, you should know that you would likely have the trend continuing. Okay, so it's all about you understanding what the market is saying. Now let's just talk about identification. All right, let's talk about spotting a running flat pattern. Okay, because it actually requires a keen eye and a bit of practice. Right, it requires a keen eye and a bit of practice. So here's what you should be looking for. Okay, like I already mentioned, where is that place I drew those lines, right? So like I already mentioned, wave A is the initial pullback against the trend. It usually signals the beginning of a correction, right? Then in wave B, the market recovers beyond the starting point of wave A. This is a key feature of the running flat pattern. And then wave C, this wave moves in the same direction as wave A, but does not break below its end. Now, this truncated wave is the hallmark of a running flat. Okay? So now, having identified a running flat pattern, what now? What next? So here are some practical tips to pay attention to. The first is using Fibonacci levels. Right, you can actually use Fibonacci levels when you spot a running flat pattern because they often respect Fibonacci retracements and extension levels. Okay, so that's when you spot it on an actual chart, right? You can actually decide to use Fib levels just to confirm your analysis and find potential entry or exit points. And then you can also decide to combine with other indicators. You can pair your pattern analysis with tools like RSI or moving averages just to validate the trend confirmation. So it's always important you get confirmations from indicators, right? So when, for example, let's say I am adding RSI to the chart, and maybe you spot the running flat pattern, somewhere here, and then maybe along the line you are not sure as to whether the trend is going to continue or not. But if you look at RSI and you notice some strength, you notice some momentum in the direction of the trend, that can be a confirmation, right? So in addition to that, always set stop loss. All right, set a stop loss below the low of wave C in an uptrend. If it's an uptrend below the low of wave C, But if it's in a downtrend, that's going to be above the high. It's just the opposite, above the high of wave C. So this ensures that you're protected if the pattern invalidates. Remember, no pattern is 100% reliable, but when used in conjunction with other tools, the running flat can be a powerful addition to your trading toolkit. So there you have it, a complete breakdown of the running flat pattern. By learning to spot this pattern, you can better navigate market corrections and position yourself for the next big move. If you found this video helpful, let me know by hitting that like button and subscribing to the channel. Don't forget to turn on notifications so you never miss out on more trading tips and strategies. Also, drop a comment below. Have you used the running flat pattern in your trades? I'd love to hear about your experiences. In the meantime, thank you for watching, and I'll see you in the next video. Happy trading.